Good morning, everybody. Kia ora koutou katoa. My name is Michelle Lombard, and I'm the Director of Accounting Standards at the External Reporting Board, or XRB in short. I am joined today with Alex Steiner, who's going to take us through just the financial update or financial implications of incorporated societies. I would just start off by saying this session will be recorded. And if you have any questions, please drop them into the chat. We'll try to get through all the questions as they come along or at the back end. If we don't get to address your question today, we will try our best. But if we don't get to your question today, please feel free to also just reach out to us and email us, and we will definitely respond back to you in that regard. All right. Then I'm going to kick off the session. Welcome. Okay, Alex, let's go to the first slide. It's useful to just understand for incorporated societies, many of you might not be familiar with what the XRB does. So I thought it might be just useful to just understand who we are and what we deliver. The External Reporting Board is an independent Crown entity, and by legislation, we're responsible for setting and issuing financial reporting standards, auditing and climate standards in New Zealand. The standards we use are set by New Zealand entities, or used by New Zealand entities when producing the external reports. And these standards are here to ensure reported information is relevant, trusted, and can be used for effective decision making. We work across multiple sectors. So our standards are used for for-profit entities, not-for-profit entities, and public sectors. We do consider our standards scalable. So for incorporated societies coming into our standard suites, we have considered the fact that you have simple transactions or smaller organizations. And for that purpose, we have also made it a simple reporting tier or a simple reporting framework. And Alex is going to take us through that in a minute. How we fit into the New Zealand reporting environment is important to know that we only decide what information gets reported. So we don't get to decide who must report using our standards. For incorporated societies, MB have developed the legislation, so the new Incorporated Societies Act of 2022. And within that, it sets out the reporting requirements and who has to report using our standards. So I hope that gives you some context of who we are. We are looking forward to working with you. And like I said, we have tried to make it as simple as possible and give you the relevant tools to make your reporting journey into the XRB suite quite seamless. With that, I'm going to hand over to Alex. He's our project manager that actually deals with incorporated societies. And yes, Alex.
Cool. Thank you, Michelle. Yeah, so hello, everyone. My name is Alex Steiner, and I'm the lead on incorporated societies here at the External Reporting Board, and I'm a project manager within the Accounting Standards team. So with today, the aim is to go over the new financial reporting requirements brought in by the Act and how an incorporated society would determine which accounting standard to apply. And I'll also go over the Tier 3 and 4 standards, just a brief overview. And then I want to note just a few high-level considerations just to think about as you embark on using the XRB standards. But first, I'll start off with some background, because I acknowledge that there's probably a lot of accounting practitioners on this call, but there may also be some members of incorporated societies here. So by way of background, I think this is an important piece of the picture about incorporated societies and puts the changes that are occurring to them into context. So there are over 23,000 societies, and that is a pretty large number. It's quite a large population, and it does mean that a large number of people will be impacted by these changes. And we know that they are, of course, located all over New Zealand. But unsurprisingly, they are weighted heavily to where our general populations are located or resides. So for instance, we have around about 25% of incorporated societies located in the Greater Auckland region versus around about 13% or so in the Greater Wellington region. And there are a number of incorporated societies that are registered charities. And due to the charity legislation, these entities will have already been applying the XRB standards for a number of years. And so just based on a small sample that we have done of the population, and just to give a little bit of a flavour for the sector, you know, by all accounts, incorporated societies are quite a diverse population. So they do cover a broad range of services, activities and pursuits. And some of these organisations can be very large, while others can actually be, or the majority of them can actually be incredibly small. And in terms of our analysis, it suggests that around about half of all incorporated societies have actually been set up for sporting pursuits. And I also just want to note that many of the larger incorporated societies may already be following standards issued by the XRB, or at least applying accounting policies consistent with those in our standards. So in this session today, I will be covering the recent changes to reporting requirements that have been brought in by the new Act, the Incorporated Societies Act 2022. Now, the previous Act, the Incorporated Societies Act 1908, was over 100 years old. And so on the back of a review undertaken by the Law Commission in 2013, it was recommended that the legislation needed a bit of an overhaul. It was outdated in parts and could do with being modernised and having clearer governance requirements. So following a process over the last 10 years or so, the Act was drafted, and now the new Act has taken effect, and it took effect in October 2023. And there are several implications for incorporated societies. They will be subject to some new rules, and they will likely need to update their constitution for some of these change requirements of the new Act. And of course, they will also have new financial reporting requirements. In terms of the financial reporting requirements, incorporated societies previously had only been subject to the minimum financial reporting requirements that were listed in the old 1908 Act, and any other requirement that they may have agreed in their own constitution. And so this means that it's really likely that a large number of incorporated societies have never needed to engage with the External Reporting Board or the standards that we issue. So with the new Act introduced, there is a 2.5-year transition period where it replaces the old 1908 Act. And what this means is that societies, if they wish to remain incorporated, they must re-register under the new Act between October 2023 and April 2026. And only once they re-register do the rules of the new Act take effect, and then the new financial reporting requirements need to be followed. So what are these new financial reporting requirements? Well, very simply, some incorporated societies will need to use the XRB reporting standards. However, not all have to, and there is one really important exception, and it's those societies that can meet the criteria of a small society as defined in the Act, and these entities can choose. So they can choose to follow the requirements that are set out in Section 104 of the Act, or they can use the XRB reporting standards. So for all other societies, the legislation does not provide you with that option to follow the requirements in Section 104. And I've actually just reflected what these requirements are on the next slide. So as you can see here, I've just put the legislation up. But what it refers to is that the financial statements must be prepared in accordance with generally accepted accounting practice, GAAP, and in some cases, a non-GAAP standard. Now you can see there that for a small society, they're the only ones that have that option to follow the requirements set out in Section 104. So where generally accepted accounting practice, or GAAP for short, or a non-GAAP standard is referred to, this means, or it's defined to mean, the applicable financial reporting standards issued by the XRB. So ultimately what this means is that if you're an incorporated society and you do not meet that criteria to be a small society, you will need to apply the XRB standards. Now, if you are an incorporated society that is a registered charity, or you may be working with one, these societies will have already been required to prepare financial statements in line with generally accepted accounting practice or a non-GAAP standard for a number of years, and this is due to the charities legislation. So nothing changes for these entities. The new Act states that if you are a charity, that you should continue to follow the Charities Act instead in respect of these financial reporting sections of the legislation. So more on the XRB standards shortly, but first, I just want to cover off what a small society is. So the criteria to be a small society is that you must have both your operating payments and current assets of less than $50,000 in each of your last 2 financial years. And your society must not be a registered charity or an approved only organisation within Land Revenue. So operating payments, now these are the total of your expenses that have actually been paid during the year, so either from your bank account or from in physical cash. But it does exclude capital payments, such as those for purchasing assets or debt repayments. And with current assets, these have actually been specifically defined in the regulations that accompany the legislation for the criteria in the Act. So the definition for this is that total current assets are those assets that are expected to be used, disposed of, sold, consumed within 12 months after your society's financial year end. Or it could be that these assets are primarily held to be traded or for the purpose of being traded. Or if it is a bank account deposit or something similar, it must not be restricted in use for at least 12 months after the society's financial year end. And this is in contrast to non-current assets, which are those that are held for a much longer term and you expect to use for several years, and that might include like a building or equipment. So ultimately, if you are a small society, you can choose to prepare your financials in line with the Act or apply the XRB standards. And I just want to note that the minimum requirements that are listed out in Section 104, they're practically the same requirements that were in the old 1908 Act. These, they state that the financial statements must contain information on income and expenses or receipts and payments, assets and liabilities, or include a description of mortgages, any other security interests over property held by your society. So if you're a small society and you're electing this option, nothing much actually changes. You can largely continue to prepare financial statements in the same way you have always done. Now, for all other societies, you will need to apply the XRB standards, and for context, and as we touched on in the introduction, that we issue our accounting standards across 3 sectors. So we've got the for-profit, we've got the public sector, and we've got the not-for-profit sector. And so to work out the specific accounting standard that you need to apply, you first need to understand which sector applies to you. Most societies will be not-for-profit entities for the purposes of the XRB framework and will be able to apply the accounting standards of the not-for-profit sector. And so we expect that most societies can do this based on the primary nature of what they've been set up for and what they do. So we consider that a not-for-profit is an entity that aims primarily to deliver goods or services for community or social benefit, not with an intention for returns on equity. So this does not mean that if you generate a surplus, you cannot be a not-for-profit. It more comes down to your intentions on how you will use those surpluses. We do acknowledge that there could be some exceptions. So you do want to review this further. We suggest taking a look at XRBA1, which is a document on the XRB Accounting Standards Framework, and in Appendix A, there's some guidance on how you can make this assessment. Right, so once a society confirms the relevant sector they're in, they'll need to determine the applicable accounting standard to apply. And so our accounting standards, they're grouped by reporting tiers, and these tiers are based on the financial size of an organisation. So on this slide, I've got the not-for-profit reporting tiers here, given that we expect the majority of societies to use the standards in this sector. And you'll see here that we've got tiers 1 and 2, and these are for our larger organisations. Tiers 1 and 2 are generally accepted accounting practice. The requirements are more complex. They're based on international standards, and these societies will need to have their financial statements audited. We do only expect a really small portion of societies will need to apply these tiers, maybe around about 1%. And then we have tier 3, and this is for our mid-range to smaller organisations. And again, it is generally accepted accounting practice. It is a single New Zealand financial reporting standard. And for those in the top half of this range of expenses of $3 million or more, you will need to have your financial statements audited too. And then we have tier 4, and this is for our smallest organisations, and this is a non-GAAP standard. So it's a single New Zealand financial reporting standard, and it's intended to be applied by anyone, those without expertise in accounting as well. So we actually expect that out of those societies that are going to be required to apply the XRB standards, that the majority will need to use tier 4. And so just want to make a couple of notes about these tiers. So if you are a society that controls other entities, you will need to assess your position in respect of these tiers based on the sum of your total expenses and operating payments of your society and all the entities it controls. So effectively, you're assessing it against a consolidated group position. And finally, I've got a note here about public accountability, and I just want to make clear that you don't take a general meaning of this particular term. It's very specifically defined. But if you do have public accountability, you are required to apply tier 1. So I have noted quickly around when these requirements will take effect. And so they take effect once your society has re-registered under the new Act. So what that means is from that date that you re-register, you must apply the requirements to the preparation of your next set of financial statements. Now, for example, if your society has a 30 June financial year end and decides to re-register in December 2024, if you have already completed your 30 June 2024 financial statements, your society would apply the new requirements to the 30 June 2025 financial year. And in terms of the timeline for preparing your financial statements, the new Act requires that your financial statements are completed and an annual return filed within 6 months of your society's financial year end. So in terms of an audit requirement, I did touch on this briefly in the reporting tier slide. However, certain larger societies will need to have their financial statements audited going forward. And you'll see here that your society must not be a charity, and that's because the charity legislation will apply for your audit requirements if you are a registered charity. And otherwise, a society and all entities it controls, they have expenditure $3 million or more in each of the last 2 financial years, will need to have their financial statements audited. So we do understand that a number of societies have their financial statements reviewed or audited already, and that this may be due to other legislation, such as the Charities Act, or it might be a requirement that you've just agreed in your own constitution. So nothing needs to change here. As a result of this requirement, it just means those societies that meet this criteria must have their financial statements audited. Cool, so this brings me to the end of talking around the Act and about the accounting standards to apply. And I just want to give a quick refresher on both the Tier 4 and the Tier 3 standards. New versions of these standards that replace the older versions will need to be applied for reporting periods beginning from 1 April 2024. However, they can be applied early for balance dates ending from 30 June 23. So to the Tier 4 standard, it is a single New Zealand reporting standard. All requirements are kept in one document. It is a cash-based standard. So this means that transactions are only recorded when cash is received or paid. And this is as opposed to when transactions occur. And there is a first-year concession. So this means that you can apply the Tier 4 standard from just the start of your current financial year. You do not need to go back and apply it to the previous financial year information. You do not need to display any previous year financial information in the financial statements. Instead, you can just attach a copy of your previous year financial statements to your current year financial statements instead. So it has minimal requirements. They're all intended to be straightforward. So you will need to prepare a statement of service performance. You'll need to prepare a statement of cash received and cash paid and provide explanatory information in the accounting policies and the notes. We do have template financial statements, which are available on our website, and these can be very handy to help you prepare your own set. So I do just want to cover in a little bit more detail a couple of these components. So I'll just do that now, and starting with the statement of service performance. And so this is intended to outline the performance of your society from a non-financial perspective. And it will ask you to describe the main activities that you've undertaken during the year and to provide a measure of those. And so, for instance, this might be the number of specific events held, teams that you've put together, new services that you've performed, new members. And this disclosure really aims to provide information that helps your members or the readers of your report get an understanding of what the society is doing to achieve its objectives. And you can present this information in whichever format you like to. We just have featured on this slide here the template, which is really a very simple format. It just asks for a written description. Now over to the statement of cash received and cash paid, and this is all around recording those transactions through your bank account and physical cash during the year, and then asks you to classify these individual transactions into common groups or common line items and present those totals for the year. So there are two main sections to this. There will be operating activities and other activities. And your operating activities are those day-to-day activities that you undertake, whereas your other activities, they may include more one-off capital type transactions, payments for investments or assets or money that you've received from debt that you've borrowed. And it's important to note that the format and the classifications that you use within this statement, they're all provided by the standard. So for instance, I do have two line items on this slide. There's donations, COHAR, bequests and other fundraising, and there's also general grants received here. So these are a couple of examples of those line items that will be set by the standard. And I just want to note that you do not combine these line items together in this statement, and you do not break them down further. So for instance, if you wanted to include, say, the individual components that make up your general grants received, you would include that information in the notes to the report. And finally, you can, and if applicable to you, you should use different names for these line items if you think it will make it more understandable to your members or to those reading the report. Now, in terms of the accounting policies and the notes, this is where all the explanatory information is included. So the first component of this is how has your entity done its accounting? And the first part of it is how have you prepared the financial statements? And you're required to include a statement that the report is prepared in accordance with the Tier 4 standard and that transactions are recorded on a cash basis. And the second part of this is you need to mention how you've recorded GST within the report. Is it on an inclusive basis or an exclusive basis? Template wording is provided within our templates itself, so I suggest having a look at those. And then the next component is information on your assets and liabilities. And I just want to note that no balance sheet or statement of financial position is required. You'll just need to include the significant assets and liabilities that are listed in the standard and in the template that are applicable to your organisation. Now, the amounts that you can record these are at for assets, it might be what you purchased the asset for, or it could be an estimate of its current value. And this might be based on what you expect the replacement cost of an asset would be, or it might be a rateable value if it was land and buildings, for instance. And it's a similar situation for liabilities. You just need to note the amount required to be paid or to settle that liability. And finally, there is a related party disclosure. And these disclosures allow your members or your other readers to understand whether any transactions have occurred with those that are closely related to the society. And those parties that have a close relationship are listed out in the standard, but will generally include individuals or their close family members that have influence over the decisions of the society. So that might be the committee or the board members, or it could even be the management. But the template and the standard, again, they step you through those requirements. Last year, we did produce a short video that explains how to use this Tier 4 template. So there are links on the XRB website, and I recommend taking a look if you do have a few minutes. Now over to the Tier 3 standard. I won't go into as much detail on this one, but it is also intended to have straightforward requirements, especially if your society is not subject to a lot of complexity. So again, it is a single New Zealand reporting standard, so one document with all your requirements. It is accrual-based, so this means that transactions must be recorded as they occur rather than when cash is received or paid. And like the Tier 4 standard, there is a first-year concession. So on your first time adopting the standard, you can apply it from just the start of your current year. You do not need to redo your prior year numbers or even display your prior year numbers. You would instead attach a copy of your previous year financial statements to your current year financial statements. Now, in terms of the requirements, you will need to prepare a statement of service performance, statement of financial performance, financial position, cash flows, and then provide explanatory information through the accounting policies and the notes. So with the statement of service performance, I just want to highlight that it is similar to Tier 4, but you do have to provide a little bit of extra information. So you'll need to provide information on what your society is aiming to achieve over the medium to long term. And you would still describe the significant activities that you've undertaken during the year, but you'd link that towards these objectives. And so the information that is required, it is linked to the broader mission or purpose, but it is intended for it to be more specific and to focus on those objectives. And so to give an example of this, a society's mission or purpose could be to support and promote participation in a sport. So it might have medium to long-term goals of increasing youth participation or improving facilities or increasing engagement with the community, and you would tie your activities to those particular objectives. This information is likely already reported in one form or another to members of most societies, so it's just a case of collating that together for this particular statement. Now, in terms of the statement of financial performance, financial position, and cash flows, I think it's important to note that the presentation and the format are specified within the standard itself. So you do have your items of revenue, expenses, assets and liabilities, the classifications for those, and actually the way that you record them are specified within the standard itself. So for instance, if you had revenue of membership fees and subscriptions, the standard would outline the relevant accounting policy for that. And not many estimates are required. So there will be useful life for depreciation and collection of receivables, but otherwise not too many. And in terms of the statement of accounting policies and the notes to the performance report, again, there's some standard accounting policies that you'll need to disclose. And again, for the notes, there'll be certain notes will need to be disclosed when they are applicable to you. And so that covers off just a brief overview of those standards. And now I just want to raise a few high-level things just to consider. And so one of the things to bring up is that there may be information that you included in your previous reporting that is no longer required. And so we've seen across a number of societies that they may have trading statements for bars or for livestock, or they may segment their reporting by membership class or by membership and non-membership activities. Applying the XRB standards does not mean you must exclude this information. It's just worth considering how you can integrate that going forward. Is it part of your financial statements? Is it in a separate report? Do you include it in your notes? Now, with the service performance reporting, having discussed that quickly within the Tier 3 and 4 space, it is important to consider what your members' expectations are in your service performance reporting measures and your objectives too. And I think a really important part of this is understanding, do you have the data that you need to be able to report on what you want? Especially if your society will be subject to an audit, the statement of service performance will also be within the scope of that audit. So it is worthwhile having an upfront discussion with your auditors about the support that's required to actually substantiate your disclosures in this statement. And third, we've got the accounting for interest in other entities, and this applies for tiers 1, 2, and 3 of the XRB accounting standards, and this is requirements for consolidation or for the accounting of interest in other entities. And determining if these requirements apply to you is not necessarily straightforward. And if you do need to apply these requirements, you will need information from other entities in order to complete your own financial statements. And this may have an impact on the timeline of completing your financial statements. So some things to consider are whether a society owns or controls another entity, and you may need to consolidate. And this is just the process of combining financial information across the group to produce a single set of financial statements. Another thing to consider is whether you've entered into any agreements with other organisations to jointly run some type of operation. You may be in a place where you need to account for a joint arrangement. And another thing to consider is, do you have any investments where you may have a lot of influence over another entity? And there could be circumstances where you may need to account for an investment in an associate. So I'm just raising these because there's quite specific requirements in regards to the accounting for interest in other entities, and you will be reliant on information from other sources. And finally, the last one is just to consider the time, effort, capability, and capacity to make these changes. We know that many societies will have different environmental things going on for them, and it's just about considering, oh, yes, we're going to be faced with an audit for the first time. Do we have what we need to be able to handle that sort of thing going on? And it's good to consider that up front. So that is everything from me and what I wanted to cover in this session. So if you are after some more information, please visit our website or be in contact with us. Thank you. I guess we can have a look at some questions now. Michelle.
Yes, I have been monitoring the questions. I've been answering them as they came through. Is there any other questions that we can answer for you? Seems no. Please raise it in the chat.
Well, please feel free to get in contact with me after as well.
Yeah. All right. Yes, I think that's it. Is this, yes, we do have our email address there. Please reach out if you do have any questions that come up. Oh, there's a few coming through now, Alex.
No,
can we get a copy of these slides? Yes, we'll share that afterwards. Probably not today, but in the next few days. I'm going to say answer live. Alex, do you have those questions up?
Just trying to find them. Oh, we've got one here. If you are a charity, you need to comply with the registered charities requirements instead of incorporated societies. Yes, so if you are an incorporated society that is a registered charity, there is a provision in the Incorporated Societies Act that says that you must use the Charities Act requirements for financial reporting. But ultimately what you will find is that the charities reporting requirements are to apply the XRB standards, and the incorporated societies, it's now also moving there to apply the XRB standards aside from that small society provision.
Oh, we've got a raised hand. Let me quickly see, how do I get... Miko, I think that you had a question. Is that correct? Maybe just put yourself off of mute. Okay. We might wrap up this session. If you do have any questions, please reach out to us directly. We do have our email address. And if we didn't get through any questions, yes, like I said, we're happy to take questions offline then. Excellent. Thank you very much, everybody. Have a good day.